For decades, Intel was the darling of the stock market, and it appears to have fallen from grace.
People are panic selling.
As holders of the stock, we wanted to know, with everything going on, is it a good time to sell the stock? Should we add more? And how does this impact you?
Honestly, I think that's the wrong question. I think the right question is, why would a company who's already profitable, could afford their dividend, had a little bit of corporate bloat, jump fully into a foundry that is losing them money, dividends, and investor confidence along the way?
For decades, Intel was the dominant force in the server and workstation computing space. Every once in a while, you would see AMD or another chip manufacturer come up and say, hey, we got a better chip than you. And Intel always had an answer for this, until they didn't. Up until COVID, people worked at desks and computers that were relatively stationary. It wasn't until recently that mobile computing space caught up in terms of its capacity and allowed people to start working on tablets, and even these. This created such an impact that even the CEO of Intel said that, hey, we are going through our largest restructuring in 40 years.
Yeah, but if you were the CEO of Intel and needed to reposition your company to future-proof it, how would you do it? That is where Foundry came from. It's a way for them to split their chip operations, become more competitive in the market and within their company. But is there more to it than just Foundry? The answer might surprise you.
War is hell, and we do not advocate for war. But imagine for a moment you are a weapons manufacturer and you need semiconductors to finish your product for your government and you don't have them. What do?
Now imagine a military guy showing up at your door telling you, I must break your microwave.
I must break you.
This actually happened. People were raiding microwaves, dishwashers, you name it, just to get the semiconductors to keep the war machine going. This happened to such a degree that the United States Pentagon took notice.
Why would they care? Almost the entire world relies on Taiwan for these little chips that go in almost every electronic device we use. With the supply chain exposed due to the pandemic,
and the warships circling the island from China.
Intel won an $8.5 billion contract from the US government to help solve this. In a nutshell, this is why Intel has been reinventing themselves. So, how's it been going? To answer that, we need to get into the Q2 earnings report.
So we're assuming if you've gotten this far in the video that you've already probably heard about the earnings report, you're capable of going through it mostly yourself. There are a few things in the earnings report that we want to highlight to you that we think would be of some interest. So if you go down and you look at the executive summary, the first thing you're going to notice is they're going to highlight the $10 billion cost reduction plan. To us, that is a bit of a red flag. Everybody says do more with less, but we know with 15% less workforce, it's going to be harder to go through and do the objectives that they said they would do all the way to 2030. So we see that as a little bit of a red flag for them to be able to complete what they said they were going to do. Moving on, we also want to highlight the Q2 financial highlights. We can see that the revenue and gross margin here are roughly the same. The earnings per share number, which we've said in past videos, should always be above 1. However, it is nowhere near that right now. And to dig into why that's happening, we can look at their product line. If you go back down the page, you can see CCG, DCIA, NEXT, all of their product segments are doing relatively healthy, except for Intel Foundry. If you want to know why the business is not profitable, look no further. They're at the last quarter, they lost $2.8 billion of operating revenue trying to build out this foundry. Now this is somewhat to be expected because this is what they said they would do. The problem is it's been taking longer than they said it would. That said, we move on to Altera and Mobileye and we see that the IPO that they talked about may still potentially happen. That could be a good thing long term. As far as their outlook goes in Q3, we have another problem. Because of the drag on earnings and the market conditions that the CEO cited himself, we have what is looking to be a negative earnings per share guidance for Q3. This is why Intel has suspended their dividend and why the stock has gotten brutalized in the past week. Moving on down the line, when we go through our monthly stock purchase, we tend to look at a few other metrics of how the business operates and how they make money from that business. In Intel's case, they are overall not profitable, but there are something on their 10Q report on page 11 that we want people to notice. As far as the Intel products revenue, when you look at the 6 months ended and 3 months ended starting in July of 2023, you can see that the revenue increased on 6 months and was relatively flat on 3 months. The problem comes in when you look at Foundry. Foundry is the operating revenue loss for the business, but outside of Foundry, Intel still has a viable product line in a business segment where the revenue overall is growing. But there's something else we would like to highlight about the overall market before we tell you we would buy or sell the stock.
Now, use caution, this is a speculation alert. But when we were going through the statements, in particular the cash flow statement, we noticed that Intel is stockpiling a lot of cash. Now, you could say that they're trying to maybe stave off a buyout attempt, or they're using it to break ground for new facilities.
But we noticed they're not alone.
Right. If you look at other businesses, looking at banks, and Warren Buffett just sold off a lot to increase his cash flow to $277 billion. There's something more going on.
It begs the question of, do they know something that you guys might not know?
Now, what we think is there might be a bigger recession coming, or maybe even a bigger market crash.
Now, it could also be just a doomsday prepper thing where nothing will happen, and just in case it does, they're preparing for it. But we've been talking about a recession for the past couple videos. In fact, this is the whole reason why we did not buy any REIT stocks just yet. It's not just the housing market that's getting affected by this. Regarding your position, should you add to Intel? Should you sell Intel? We hold Intel and we're not selling it. Now, we're looking at a purchase opportunity for Intel, but there are some red flags there that mean that it could be a riskier play. If you have a whole bunch of other stock and Intel is a good diversification play, go ahead, jump right in. Now, if this is your first stock, I would wait until they show some progress on Intel and the manufacturing footprint that they have coming back to life. We do believe that Intel long-term is going to be a good play because of which spaces they play in and how dominant they were in the market for so long. There's a lot of infrastructure there and a lot of connections that they've built up over a long period of time that still are there. This is a business that we believe in the long term will be a good play. So if you do not yet have a platform to purchase stocks, we have partnered with both Seeking Alpha and Moomoo Finance to provide you both the information like what we found today in Intel, as well as Moomoo Finance to give you some discounts, potentially free stocks, if you should sign up below. Those links are down below.
And if you're finding value in everything that we've given you so far, please go ahead and subscribe because that helps us out tremendously.
We've got a few more stocks to cover and then we're going to make our monthly purchase, so stay tuned for those. And as always, thank you for watching. See you in the next one.